Welcome everybody. Thank you for tuning in. Lenny Hayes here from Trade Hall, just giving a weekly update to the events that occurred over the last week. Last video, we touched on the instability in the US banking system and financial turbulence that was being experienced around the world. The end of the week was no different. With huge news out of Switzerland with Credit Suisse on the brink of collapse due to balance sheet instability and reported insolvency and liquidity issues. So that broke on Thursday night, and into the Thursday that was traded on. We saw massive moves across Europe in the bond space and rates. Essentially, news broke that the Credit Suisse's largest shareholder, which is the Saudi National Bank, announced that it wasn't going to invest any further into the troubled Swiss lender. Therefore, it triggered a large sell-off of shares during the Thursday session in Europe, and the share price plummeted by around 30% that day. And as Credit Suisse is a systematically important bank in the global financial system, this was a lot bigger than regional banks that we saw collapse in the US. Credit Suisse has, a lot of the banks around the world have huge exposure to Credit Suisse and have loans and debt on respective balance sheets. And so look, it triggered a panic, a mad dash around the world to figure out what holdings were in place and what exposure there was, and how the Swiss National Bank, the Central Bank of Switzerland, could shore up Credit Suisse and reinsure investors that money was safe and calm nerves a bit. But anyway, that unfolded, and it now looks as though that UBS is in talks. The other big bank in Switzerland, United Bank of Switzerland, are in talks to take over the troubled bank, Credit Suisse. Nothing's been announced yet, nothing's been set in stone, but it looks as though that Credit Suisse will be bought out in some way or another. Different divisions will be spun off and dissolved, but Credit Suisse as a whole entity, as it stands now, is doubtful to continue as a going concern. So, look, the timeline around Credit Suisse's collapse is a complex one, and it dates back a number of years now, and it's all sort of built up and become just constantly mounting pressure on the shareholders. And over the last 2 to 3 years, it's just been a downward spiral for the bank. With the turbulence we've been seeing around the world with the banking sectors at the moment and the economy, this was all too much, and we saw investors pull their money out in droves. I will show a video, or maybe a separate video, a really good video here. It's just an insight into the banking chaos that's rattled the financial world of late. So that'll be a separate video available to watch, which is very insightful, and it's a good additional piece of content that you'll be able to watch. So look, what really happened in the events following the Credit Suisse sell-off? Obviously, we saw the volatility in bond yields. They initially went lower as the news broke. It coincided with the European Central Bank actually raising their interest rates the day after. So you can just see what happened. It did move by a few points the day after. A lot of people did think there was a little bit of there could have been a late change to go and to backtrack on their initial stance. But as you can see, the main refinancing operations, it was spiked by 50 points there, from 3% to 3.5%. So that didn't change their trajectory as a result. That came a day after. So obviously the euro, all these back to short-term time periods. Euro, this is when it happens. So as you can see, the currency market's always a massive way of representing risk and fear in the market. A huge face-ripping decline there as the news broke. Euro fell off a cliff there. Currencies are usually the first ones to be smashed. Recovered some ground since, but that was on the news there. The Swiss franc, so the domestic currency of Switzerland, the situation is historically a safe haven asset. We've got to remember that this is in terms of USD, CHF, the Swiss franc. So the USD is appreciated greatly against the Swiss franc. So the franc losing a lot of ground as the news broke there on Thursday too, since recovered a bit. So what we saw was the Swiss National Bank stepped in with a $54 billion franc loan and essential bailout to Credit Suisse to reinsure investors at the bank now had sufficient liquidity to deal with cash flow impediments on a short-term basis to shore up some of its liquidity and liabilities. So that calmed down the market somewhat on Friday, and that'll put an end to the bleeding. So yeah, that's what happened really. That was the reaction to everything. We did see Credit Suisse recover a bit of ground there on Friday. It was up about 30% at one stage, but finished about 20% higher off its lows. So yeah, it does look as though now it will be taken over. It won't be trading. It's now in a trading halt, but yeah, so that's what's happened. US dollar, it lost ground on Friday night. I think risk really was back in the Friday session for the end of the week. And like, if just stepping back and having a look what happened, it's been one of the most wildest weeks we've seen in recent times. I mean, the last 7 days, we've seen the second and third largest US bank failures of all time. We had banks that collapsed. SVB and Signature Bank had their deposits guaranteed 100% through a systematically important exception, despite not technically qualifying for this. So the US government stepped in to ensure that. The federal government created a new program for lending to help stressed banks avoid insolvency. The Fed added $300 billion to their balance sheet as a result of this, reversing much of the reduction that had taken place through QT to fight inflation. We saw Credit Suisse run into turbulence and major issues, had to be backed with liquidity from the Swiss National Bank to prevent a collapse. We saw First Republic Bank provided, which First Republic Bank was another one that was teetering on the edge of collapse, but has managed to hang on. We saw it be provided with $30 billion worth of liquidity from some of the biggest banks in America. So that included JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, and others to put deposits into the bank's facilities. We saw 2-year Treasury bills in the US drop at their fastest rate since the 80s. We saw the Federal Reserve saw the largest use of the largest discount. Sorry, I'll start it again. The Federal Reserve saw the largest use of a discount window of all time. So it's a borrowing facility they have in place during times of crisis. $152.3 billion was borrowed, higher than any week in the Great Financial Crisis. On top of this, another $11.9 billion from the new Bank Term Funding Program was borrowed. European Bank, on top of all this, moved their central refinancing rate up 50 basis points to top things off. So yeah, an extremely wild week on the markets, and yeah, the Friday ended up seeing quite a steep bounce back, probably off the back of reassurance and trust that the market has now in central banks, for good or the bad, for central banks knowing that there's going to be a backstop there in any times of crisis, and they're relying on the fact that the central banks and government agencies and authorities will step in and provide liquidity where needed to prevent a collapse that may have huge systemic implications on the economy. So yeah, with that said, it's not a given, but it's definitely why the markets did bounce back on Friday. Now looking ahead, the big one for us now is the FOMC rate decision. So the United States Federal Reserve will meet on Thursday and discuss what their next hike is. It's speculated that it's going to be a 25 basis point hike. May also be a 50. A few days ago, it was priced in to be nothing. Since then, though, the rates futures have since priced back in a hike of some sort, whether that be a 50 or a 25, who knows? I think it will be a 25. I don't think they'll pause just yet. There's, like I said, the rest of the data that's coming out of the States, such as employment and growth and financial indications, all suggest that the economy is still quite resilient and stoic. Price pressures won't begin to come down until those numbers turn contractionary. But yeah, we look ahead to that. But yeah, that's the week that's been. So if you've been keeping up, you'd know it's been an extremely wild turn of events there for today. We'll check back in later in the week after the dust has settled and we've heard from the Fed, and we got a further idea of what the trajectory now is on the markets. There'll be a follow-up video of that Credit Suisse and banking saga video. I'll give access to that in a separate video, but for now, thanks for tuning in, and we'll be in touch. Thank you.